For 60 years, one man ran Berkshire Hathaway. On January 1st this year, that changed. A new CEO took over. Buffett stepped back, but he didn't take the playbook with him. That playbook is public. It's been sitting in his letters for decades. 6 tools. Not opinions, the actual formulas and filters he used. None of them need a finance degree. Let's start with the first one. Tool 1. Never invest in something you can't actually explain. Buffett calls this his circle of competence. Stay inside the line. If you can't explain how a company actually makes money in one sentence, it's outside the circle. No exceptions, no matter how exciting it looks. He'd rather own a company selling soda than one he can't fully picture. Simple isn't a weakness here. It's the entire filter. Tool 2. Does the business have a moat around it? A moat is whatever keeps competitors from stealing the business. Sometimes it's a brand people trust without thinking twice. Sometimes it's a cost advantage, or a patent, or a network too expensive to rebuild. A wide moat means profits keep flowing, even when competitors try hard. No moat means today's profit is just a rumor about tomorrow's. 4 tools left. This next one is the one nobody actually shows you. Tool 3 is the one most people have never actually seen. Buffett wrote it out himself, in a shareholder letter back in 1986. He calls it owner earnings, what's actually left over after a business truly maintains itself year after year. Start with net income, the number everyone already reports. Add back depreciation and amortization, since that money never actually left the bank. Then adjust for the change in deferred tax, another figure that isn't real cash yet. Now subtract what it actually costs to keep the business running as is, not growth spending, just maintenance, keeping the lights on. Last, adjust for the change in working capital, the cash tied up in the day-to-day. Add it all together, and that number is what the business actually generates for its owner, not the number in the headlines. The number that actually belongs to you. Tool 4 takes that number and turns it into a price you'll actually pay. Project those owner earnings out, roughly a decade into the future, then discount every one of those future dollars back to what they're worth today. Buffett uses something close to the long-term treasury rate to do that discounting. Add every discounted year together, and you get one number, intrinsic value. That's what the business is actually worth, not what the stock happens to say. But Buffett won't buy at that number. He wants real room underneath it, a gap between price and value big enough to survive being wrong. That gap is what he calls the margin of safety. Price is what you pay, value is what you get. He didn't invent that line, but he spent 60 years proving it in a spreadsheet. Tool 5 has nothing to do with spreadsheets at all. Buffett asks a simple question about whoever is actually running the company. Would you hand this person your life savings and walk away for 20 years? If the honest answer is no, the rest of the formula doesn't matter. Numbers can be adjusted. A person's character usually can't. Tool 6 isn't a formula. It's the hardest one to actually practice. Buffett says his favorite holding period is forever, and Berkshire has sat on enormous piles of cash for years, simply waiting. Not because nothing looked good, because nothing looked good enough. He waits for what he calls a fat pitch, the easy, obvious swing, and lets everything else go by without swinging at all. And when markets panic, that patience turns into the opposite instinct. Be fearful when others are greedy, and greedy when others are fearful. That single figure walking against the crowd, that's the whole temperament right there. 6 tools. None of them require a finance degree. Stay inside your circle. Look for the moat. Calculate real owner earnings. Demand a real margin of safety. Trust the people running it. Then wait. A new CEO runs the day-to-day at Berkshire now. The playbook didn't move. You don't need his money to use his method. You need his patience. Something a little different is coming to this channel soon. Subscribe so you don't miss it. See you in the next one.